in this thing, what's happening right now is China very firmly telling everybody, we are firmly in control. There is no private market and there is no capital market without our approval. And that's a really big statement. The long term in China is complicated. It is an enormous demographic time bomb.
Are you considering purchasing wholesale products, or are you in the process of designing a product that you wish to create overseas? Hey guys, welcome back to Chamath Palihapitiya and friends. If you follow business or e-commerce news at all, you've probably heard of Alibaba, the Chinese e-commerce company that offers manufacturing sources options to businesses of all sizes at incredibly low prices. So in this video, we'll go over some of the reasons why you should avoid Alibaba. Before we get started with the video, please leave a like and subscribe to the channel if you haven't already. Make sure you switched on post alerts so you don't miss a video from us. For those who aren't familiar with Alibaba, it is China's, and by some accounts, the world's largest online commerce company. Taobao, Tmall, and Alibaba, the company's three primary websites, have hundreds of millions of users and houses millions of merchants and enterprises. It handles more transactions than any other e-commerce firm. In the world's fastest expanding e-commerce market, it's the most popular online buying site. Last year, transactions on its web platforms totaled $248 billion, beating the combined total of eBay and Amazon.com. Following a $25 billion IPO in the United States, it became one of the most valuable tech businesses in the world, and it's also one of China's most valued public companies, ranking among the country's state-owned corporations. Do you know who runs Alibaba? Let's take a look. The Alibaba Group was founded in 1999 by a group of 18 people led by Jack Ma, the former Hangzhou English teacher. Because of its international appeal, the name Alibaba was inspired by the character Alibaba from the Persian classic 1001 Nights. The company's founders believed from the start that the internet would level the playing field by allowing small businesses to use innovation and technology to expand and compete more effectively in domestic and global markets. Alibaba Group has evolved into a digital ecosystem with companies that include commerce, cloud computing, digital media and entertainment, and innovation efforts since creating its initial website to help small and medium-sized businesses in China sell globally. Alibaba has come a long way since its beginning in 1999, but exactly what is the Alibaba business model? How did it achieve such a huge success? Let's check it out. Alibaba's business model is unique from that of competitors such as eBay and Amazon. It was more concerned with business-to-business transactions, unlike the traditional business-to-consumer approach. Alibaba concentrates on providing a platform for suppliers to sell products in bulk at wholesale costs to small and medium-sized businesses around the world, who then resell them for a profit in their domestic markets. Although Alibaba specializes in business-to-business transactions, it also facilitates other types of transactions through e-commerce websites. Tmall is for China's emerging middle class to purchase branded things, whereas Taobao is for customers to trade. Alibaba makes money through a number of different businesses, and it accounts for a mind-boggling 80% of all online sales in China. In 2013, $248 billion in e-commerce was transacted in its vibrant, chaotic marketplaces where customers may purchase almost anything. Alibaba, on the other hand, does not keep any of the money. Instead, it charges sellers for ads that are targeted to its 280 million active annual users. It also has holdings in Chinese payment services similar to PayPal, video streaming just like YouTube, and cloud computing. It's also invested in startups in the United States, including Lyft, ShopRunner, and Kabam, a video gaming company.
We will control how money is made and who makes money. And I think that sets up the really difficult thing that I think happens, which is about the long term. The long term in China is complicated. It is an enormous demographic time bomb. We've talked about this before. By the end of 2100, China's population will shrink from 1.1, 1.2 billion people down to about 700 million people.
Are you planning to invest in Alibaba's IPO? Is it safe to buy from Alibaba? Now, let's look at the reasons why you should avoid Alibaba. Alibaba's rapid expansion could be disrupted by trade issues with the United States. The prolonged battle may have already harmed Alibaba's profits, which may have been even better in recent quarters if the US wasn't putting pressure on the Chinese economy. Not only would a decline in US-Chinese trade have an impact on Alibaba's cross-border operations, but it may also have an impact on the Chinese consumer who's fueling the company's domestic growth. Furthermore, Alibaba's long-term growth strategy in the United States is already being limited by Chinese investment restrictions. Alibaba's shares are a good way to invest in China's economic growth, but they're also vulnerable to rising trade tensions. Don't be surprised if Baba's stock drops if the trade war's apparent end fails to materialize. In the broad scheme of things, other dangers in the stock market are rather minor. Even so, ignoring them would be foolish. To begin with, the business is virtually devoid of its enigmatic founder and long-standing leader Jack Ma, who stepped down as chairman of the board of directors. Despite the fact that he still sits on the board, he stepped down. When a visionary entrepreneur, the business's founder and former CEO no less, leaves the company, there are always risks. It remains to be seen how this will affect things. Alibaba.com has some drawbacks when it comes to sourcing from other countries. Customers may believe that imported goods are of poorer quality than domestic products. There's no easy method to do an on-site visit before purchasing, and shipment takes longer. One disadvantage of using Taobao is that it is recognized for having a counterfeit goods problem, which can be tough to compete with. For sourcing in China, Alibaba has a number of drawbacks. On Alibaba, what does it mean to be a gold supplier? It's just a rumored supplier who's willing to pay for a bigger, prettier ad. It's not a supporter of the company's integrity or promises. It does not have a good international reputation. The company has been the subject of numerous complaints. Problems with products, service issues, payment issues, advertising issues, and delivery issues are all common complaints. Alibaba competes with you by offering the same goods to everyone, even your competitors. If you're a seller in Europe or in the United States, you want to set yourself out from the competition. There are some poor firms or even scams within the Alibaba company listings. Are you able to differentiate between the two? Which firm is genuine? Which one will deliver on its promise? Is it worth taking the risk because of the potential big returns while ordering from Alibaba? Certainly not in the case of huge orders. Many, if not all, Alibaba vendors do not actually hold the inventory. It's possible that their supply will fall short of what they claim. For some, the site may be adequate, but if you're serious about custom products manufacture, you'll need a trustworthy business partner in China. In China, competitors may find it difficult to copy Alibaba's business model. It's difficult to say how much of its success may be attributed to its strong ties with local government leaders. However, it currently controls such a large portion of China's e-commerce business, its size and connections make it difficult to duplicate in the country. Alibaba's core e-commerce platform, on the other hand, does not appear to be practically difficult to copy. Others might be able to copy what it does in markets where government links aren't as vital. Technological advancements could erode its moat. Alibaba, like many other e-commerce companies that started before 2007 when consumers began to use cell phones for more and more aspects of their lives, is at a technological disadvantage. Alibaba's technology may become a historical artifact unless it can adapt it to perform well on smartphones and continuously modify it as new smartphone technologies emerge. If consumers were willing to invest in technology-based businesses, they would challenge Alibaba's aspirations to maintain an unbreakable moat as technology evolves. Its consumer appeal is based on powerful but not fundamental forces. People enjoy shopping for items and comparing prices. They're happy to do so if they can do it through an internet service such as the ones offered by Alibaba. On its website, a large number of people have done so. But people may ask Alibaba difficult questions such as whether those users will become addicted the first time they shop there and continue to do so for the rest of their lives.
The Chinese government owns the data of Chinese companies. So at the end of the day, the Chinese government also owns the users and it also owns the revenues. It just hasn't told you yet. I think that what we're starting to see is the beginning of nationalizations. And I think it's going to start in technology universe because those are the critical assets that the Chinese need to own for the future.
With that, we've come to the end of this video. If you found it interesting, make sure to hit the like button and let us know your thoughts in the comment section below. Also, make sure to subscribe if you haven't already. Stay tuned for more upcoming videos.